All right, good morning. Game 221 of the 2025 season. It's been certainly a particularly important 3 to 6 day period here. I tend to say that when I say I don't know when quad four risk, for example, in this case, was going to happen. I mean that sincerely and mathematically, which are both the same thing. But again, I don't know. But when I know, I know. Are we good with that? It's pretty straightforward. Do you know when it's going to rain in then 2 weeks from now? When it's raining 2 weeks from now, do you know it's raining? Just go outside. I mean, it's conditional factoring. Okay, so I can't coach it. Well, I can think of it the same way every morning. I'm trying to coach it different ways so that more people can come underneath our tent and stay dry. When it is raining, Bitcoin's crash is now at 27%. If we were down like 7% in something, some people in Hedgeye Nation would be jumping out of the windows. So that Nvidia is actually down 10% now from its cycle high. What you'll see looking backwards is history, the monthly quads being. So again, while I didn't know when it would matter on quad four, quad one was clearly October, right? So whether it's the high retail sentiment basket, which is the most widely owned names on the YOLO crowd, or the hoodies, or whatever the hell you want to call them. That stock, by the way, broke trend yesterday. Robinhood, that's down 18% since October the 6th. That peaked in and around when Bitcoin did. And then everything else peaked and rolled in October too. So again, history is pretty straightforward if you look backwards, and that's what's going on. When does quad four abate? Well, Nvidia's got to deliver. I go through that this morning, not in terms of the narrative. I love Jensen's narrative. The dude's favorite restaurant is Denny's. That's awesome. But I don't like Denny's. But that just is awesome. That's where he found his footing. For Nvidia. So again, he cleaned toilets and liked it. I mean, what a great story. But I don't give a shit about his story this morning. I care about the risk range. Where's the trade and where's the trend? I go through all that in the early look. I know you'll go in there for that, whatever they call it, the Grand Slam breakfast there, Bennett. Looks like you haven't missed that many.
You're damn right, Keith. I'm probably the latest person on the call here to go to a Denny's. Uh, Queens, New York. I took a bus there from Harlem. It was great. I wanted the whole experience, and I certainly got it. Nothing newsy or incremental out of me today, Keith. I would love to go back and forth. I meant to hit you last night on it, but Brinker in trend levels, a stock climb last week on the back of a lot of old wall reports and that are trying to get skin in the game. They missed this thing. Keith, you'll love this one. One of the titles: near-term difficult comparisons provide an entry point for a company still making substantial improvements. While the latter half of that is true, I mean, I can't even imagine if I came on here, I wouldn't be articulating the full story. Yes, it doesn't consider the road bump that they had in Queso, a questionable slate for the back half of the year, their fiscal year that they're in the second quarter of right now, ending December. Near term difficult comps, Keith. I wouldn't be doing my job if I put out a report titled that. No matter, this is a brand going from 2 quarters ago. They went up against a 3.5% comp 2 quarters ago, now to a 31% comp in the next 2 quarters. That is the current quarter and the next quarter. This is a mix of valuation calls, some old wall guys starting off with a buy, positive undertones on beef, which 80% of their basket is domestically sourced. So not sure where that shows up. And we're not even through the halfway point in the quarter from a data perspective. A long way to go. Meteor comps in November. So we'll watch and listen to the signal as well. I used to play basketball, Keith. I can certainly pivot, but love to go back and forth as we continue on.
Hey,
Yep.
Bennett,
We'll,
this
we'll,
is.
we'll
Oh, sorry,
put
Keith.
just put EAT in the top five most actionable. Go ahead.
Yeah, I just had a question. They're up against a 43% 2-year stacked by the June quarter. I mean, could these sales be negative for the year?
Comps will not be negative for the year. I think that's a little overblown, perhaps. You're probably referring to revenue. I look at Chili's comps is what this is going to drive. This stock is going to drive off of. They put up a 19 in the last quarter. As you mentioned, they face monumental comps on a multi-year stack, but it aligns now. It aligns now with a faltering in the product. What do you have to comp the comps? They don't necessarily have, right? You saw queso flop to start the quarter. They have ribs, a chicken sandwich that's coming in the back half. that's going to be introduced into their Three for Me platform. So the Chili's faithful are strong. I love Chili's, but that doesn't alleviate the fact of the compares in conjunction with products that maybe aren't stepping up to the Chili standard.
Yeah, the question wasn't just to repeat what you said. The question was if you're comparing against a plus 43, can you comp negative? So the answer is yes or no on that.
The answer is you could absolutely comp negative. I don't think they will, but they're going to see rate of change decels in that. Full year comp will be positive for Chili's.
Good. If anybody on our team makes a call to buy a stock 6, 9, 12 months ahead of a 43% comps, instead of giving you pink in your PA for your family, PINK, which made a new high yesterday, you'll get a pink slip. And I mean immediately. All right. Thank you. Appreciate it. We do issue pink slips from time to time. I'm not necessarily in charge of that, although I have a say in the decision. No BLC today. EAT is in top 5 most actionable. It's just sitting right there. There are a bunch of hedge funds getting squeezed yesterday, and certainly it's like, look what happened with. I'll get to it. Maybe not. No need to waste time on just repeating what we've already said. But on holdings yesterday, for example, like straight down after going straight up. Why was it going up? Because the fundamental comps are easing and they're going to accelerate? No, it's because Johnny come lately on the hedge fund side was covering it like 2 days ago and getting his face ripped off. I mean, you got to understand the flows. You got to understand the behavior of the game. If you don't, we're going to beat you over time. And thank you for joining us for not taking that alternative route. Jenkins, good morning.
Hey, good morning, Keith. Good morning from Dallas, Texas.
Like the first day that I had like 4 good things to say about your sector exposure, although they weren't like about um, DraftKings. It was
We do
Marriott,
cover other stocks, though.
Marriott, Hilton, Wynn, LVS, or 4 signal
Yeah,
strengths longs right there.
here we
And
go.
Panit was good with it. He didn't disagree. It's a good thing.
Yeah, well, it's hard to disagree when the fundamentals and the signal are nicely aligned. I actually did want to touch on hotels real quick here because I think for people that are maybe looking at a Marriott or Hilton and I think these both of these stocks are actually really primed to be really solid longs into 2026. Not that we're already need to just play for 2026. There's still plenty of 2025 left, but I think over the near term, the RevPAR data, especially in the States, which that still does dictate and does drive sentiment around the hotel space. I think it's still going to be pretty crappy. That's our read into the Wednesday's data that we're going to be getting here. Last week, you had better data against a very easy election related comp. I think what we see really for the balance of November, and then you have a very tough comp looming in December. You're still going to have that rate of change decel and Q4 on the whole and Q1 are likely to really underwhelm and actually further decelerate, or I should just say stagnate. But I look at the C corps, which I went through last week, and we were going back and forth on them. You got to think about Marriott and Hilton a little bit differently, right? I think the bear case has been talked about many a time where RevPAR sucks, so these stocks should stop working. Well, the reality is they're actually kind of the only alternative if you're trying to invest in hotels or really the lodging and leisure complex, where their operating model and their EPS algo is very resilient to softer US RevPAR trends. And there's probably some upside to RevPAR as we look into 26. I'm not going to make that call just yet because what we see 3, 4, 5 months out continues to be weak. But considering how globally tied these guys are, and global RevPAR is actually in a better place. And the net unit growth side of things, you kicked out that bear thesis. To me, it's makes a lot more sense to be positive on those names after they've really gone nowhere for the last 6 to 9 months, relative to any number of hotel REIT or lower end hotel chain, a Choice or whatever that continues to be a lot more exposed to the problems that are currently facing U.S. hotel RevPAR backdrop, which is one of deceleration, one of negative comping down year on year, and comps only get tougher. But the alternative there is Marriott and Hilton. I think there's really no other alternative in the lodging and leisure space at present. And that's a good thing. And it seems people, based off of meetings and feedback, people generally under allocated to those darlings. They could be darlings very quickly again. That'd be Marriott and Hilton. So just wanted to flag that today because we're going to get probably some weaker data this week and next week and the week thereafter on the hotel space. But that's an opportunity, I think, to be looking at getting bigger in a Marriott or Hilton.
Which one you like better?
I like Marriott better. Lower bar on the lower earnings bar. They've been much more resilient, a little bit higher end product, and then more international exposed than say Hilton.
I'd put Marriott in the top five. So again, reallocating capital, it requires patience here. So you'll get two different types of behavior right now. Hey, awesome! I did exactly what you did. Everything's good. I'm long pink instead of whatever momentum as a factor exposure or any of the things that we sold. Even yesterday, I sold industrials. When the market bounced on the open. So you're either selling on green or you're not for the last 3 to 5 days or a week for that matter. We started selling Qs last Tuesday. Or you're not. So you're either happy with the process, or now you're whining and complaining that quad one. Like, if you're saying it that way, one guy just tweeted at me. I'm going to mute him, but he whines all the time. I mean, it's just like, well, what didn't you were saying quad one in October? Yeah, because it was quad one in October, dude. I mean, yeah, it's it was raining it was sunny in October, to use the same analogy. But again, that's like excuse making, complaining, whining. If that's your line of questioning, you got to figure it out. I mean, I can't. We're trying to help you. I'm working 16 hours a day trying to help here. But if you can't help yourself and you can't just actually, if you really want to know what to do, do it when I do it. All right, especially when it's a quad four. And the next move for quad one will require patience. You don't go on the first down tick and start buying an entire portfolio of quad one. You get rid of your quad two and quad ones, and then you start to march back into the signals that prove themselves. And that takes time, right? We're not in earnings season anymore. So the hotel stocks, those two in particular, are on the buy list. So is LVS and Wynn. And I'll add them when I damn well please. All right. That's the beauty of risk managing when I do. You've acquired the opportunity that is born out of patience. Okay. Thanks, Jenks. It's good to have you back on the long side of some stuff here.
I'm sure there'll be plenty more as we head into quad one, but we got plenty of clock before we get into that period.
Yeah,
Defer to you, obviously.
In hockey, we call Jenks like a top six guy. I prefer to have him on offense. Okay. All right. Thank you, McGough.
Morning,
Right.
Keith. You got me this morning.
Ah, shit. Really? I'm kidding. Welcome, man. It looks like you're from like a different planet there with the lights.
Yeah, I know. I got this glare going on. Sorry. I'm
Maybe
not
that's all right.
appropriate.
Maybe that's your look. You look like, you look religious. It's nice.
Well, I want to touch on Amer Sports AS. We took them on our on our best idea long this weekend before the print, just citing a little bit of a disconnect between where the street was revenue wise and what the data was telling us. And that's essentially exactly what we saw this morning, delivering 30% year over year top line growth versus estimates of 27%, which was driven by accelerating trends across all the different regions and all of the brands as well. So kind of going into this quarter, the shares have been trading down a little bit, considering a marketing event in China that had a negative reaction. And China is one of the biggest components of the revenue base here. And we kind of called out, seeing that we didn't think this was going to be necessarily a huge negative catalyst. And that's exactly what happened. So China actually accelerated year over year on a tougher compare, as well as all of the other regions and all the brands, while margins also expanded. So just kind of calling out a fundamental disconnect here between where the shares were trading and what we expected to see. And ultimately, that's what happened, with shares up 9% in the pre-market.
Nice. That's a little squirrel, as we like to call it, a small cap stock. Small caps can go up, in quad four. It's just that the index is broken. Russell 2000 has broken trade and trend. Nice sale by us on that, amongst many others. Australian stocks, uranium stocks, et cetera, et cetera. And we'll look for a nicer look from Ian that looks less like he's coming from, he's one of McGough's latest young Jedis. It's grinding, doing a great job.
Thank you.
A nice job keeping it tight there, man.
I appreciate it.
I just fixed your freaking background. That is the sun rising in the east, though. I know what you're trying to do there. I'm a big fan of that. Like, I've been making that call for a long time, even when we're really bearish. I still believe in it, right, Tom?
Yeah, good morning, Keith. Just responding to your email from yesterday on sort of where the priority lay on the position monitor, sort of on the signal strength overlay. United, USPH, US Physical Therapy. That's the most interesting, in terms of the lineup on the sort of what the fundamentals have been doing in terms of volume, in terms of wage inflation. That's been a problem for them already, and then it's ranked 46 out of 58 on the quad factor score. So that would be the in lining up what you put in the email, and then what I'm seeing elsewhere. That would be the top priority short to push through. I've got the AMN data. I'll update that deck. That's a fairly low bar. That data has just continued to look bad in terms of the new postings. Plus, cross country CCRN is merging with a private company called Aya Healthcare, which we track, which is a bit of a disruptor, sort of low or negative margin type business in exchange for platform revenue. So that'll be incrementally negative, I think, for AMN to have Aya as a public company out there. And then on the long side, we might have cracked. We've been putting a lot of attention onto WGS and trying to figure out how to actually track that thing. It's a little bit difficult, a little obscure. And then we've also got Align, Acadia, and Illumina sort of in our workflow. And then on UHS, I'm a little gun shy. It's a bit of a stick of dynamite with them. So, we'll refresh it. We've got some good data sets to look at. Sort of there's a lather, rinse, repeat process that we've got going where, it ranks highly on the quad factor score. And, I can dig into, once the government reopens, the data starts flowing again, we're going to be able to look a little bit more carefully at some of the things that drive their business, particularly on the same sort of volume, pricing, and margins, or key components of how we sort of push button, get the forecast out, and then just push it through the model and get our estimate done. So it's a fairly fast process. Once it starts, it's just UHS has been sort of lower on our priority just based on how they performed in the past. But I'll just hit the send button here in just a minute as I tighten this up. That's it for this morning.
Good. That's a short, of course. There are plenty of healthcare longs. I was also working back and forth, as I do with all the analysts. That's what Jenks mentioned. That's what Tom's mentioning. I'm just checking in on different signals that are changing, because again, that's where I prioritize ideas in the book, and try to get the analysts to do the same. There've been plenty of names that Tom's prioritized on the long side that have gone straight up. Recent bullish trend signals that I've been asking him about would be, let's see here, what was I asking you about yesterday? Well, you could tell me. UHS was in there, right? I think BRKR and UHS, for example.
Yeah, Bruker, sort of, yeah. I mean, Bruker was again, it's like the mismatch between the simplicity of signal strength and sort of what the stock price is doing versus getting tasked with understanding the market dynamics for NMR and big iron that they sell. It's really been much more of a simple story around NIH, which I've found my outlet with 10x. Probably Illumina should have been a higher priority, but Bruker has such a lower exposure to that overall market. I faded that, right? Like that was just okay. I can't get a lot of leverage on my fundamental view. So just look, identifying and circling the reason that becomes a rate limiting step in all of these cases.
Yeah. And well, I can't mention the ETF, but one of our portfolio managers, Sam Rahman, who's done an excellent job pivoting to, I can't confirm or deny what he's pivoted to in a certain sector style, but let's just say that it's probably one that sounds and looks like healthcare. There are a lot of, if you just look at his holdings, I mean, he's got a lot of names that I'm sure you're looking at that would also qualify as bullish trade and trend signals. So I'm sure you've looked those up because I forwarded them to the team, as I always do as a matter of process on the weekends. All right. Thank you. Steinbomber, it's like oh no, it's Emily. Actually, Emily, I could say this to you. You're going to be equally disgusted. I mean, it's, how many people have like fawned in our business, like over the years have fawned over Larry Summers. Like, it's like, to me, he was always,
Lord.
he's like piece of shit. I've all but said that to his face. I've been in all sorts of scenarios with him. You know, he's the type of guy that every time he meets you, it's for the first time, and he's looking the other way. Uh, but he's an arrogant piece of shit. I mean, you know, now he's deeply sorry or saddened. What, like, come on. I mean, this is why. Like, you need these things to happen, sadly. I mean, I don't wish this on any human being, certainly his family. But this is what you need to have the fourth turning of the political elite, the establishment in economics. This guy is right at the top. If there was a triad, he's right at the top of it.
Yeah, Larry Summers, Bob Rubin, all those guys who were, helping the third way Democrats or the new Democrats back in the 90s, when they figured out, if the government and big business got along, we could do some great things and we'll get really rich in the process.
Yeah.
That's where it all began. I read I had this eye surgery a couple weeks ago, so I've been kind of laying low, and I read a couple of biographies on Bill Clinton, and I was reminded of Larry Summers' longstanding rent-seeking role in the American economy for 40 years. So goodbye, Larry. Thanks for your service. So, but yeah, I think Larry Summers' biggest contribution was his role in the movie Social Media, and it could have begun and end right there. So I have nothing this morning. I'm working on a deck for Friday, and the government is starting to kind of, you can hear the cogs of the machinery restarting, but it still hasn't spit out anything actionable.
Yeah. Like I just to finish on this point, I mean, um, at a bare minimum, I'm consistent, right? I'm trying to ask you, like, who is it that's running your money? Do you know who they are? You know, who is it that's advising them? Do you know who he is? Who is it that's giving X information to different privileged bysiders or not? Is that person? Like, who are these people? And why do you put up with it? For money? Really? Okay. For a lot of people in life, the answer, sadly, to that is yes. For me, it's not. Like, we want to associate with people of principle. Okay. You know, whether they get everything right or wrong is certainly not the primary concern. It's like, who are you? What do you do? Like, what do you do when nobody's looking? Like, these are, how full of shit are you in the case of Larry Summers and all these economists? That bare minimum is something you should be able to answer when you're trying to make an investment decision. I digress, Steiner. Just sad and pathetic.
Good morning. So yeah, not too much for me this morning. We've got our Wells Fargo call today at 12:30. I guess one thing that is notable is, I talked, what was it, maybe a week ago, 2 weeks ago, about these rumored $2,000 checks being, not particularly substantive. Besant was sort of told to go out there and I think kind of diffuse things a little and talked about how, well, a lot of people may already be getting their $2,000 check in the form of, a tax cut from, the big beautiful bill. But it seems that, this plan is starting to, I guess, firm itself up a bit. And the timing, I'm sure JT can comment on this, but the timing seems aimed pretty squarely at going into the midterms, getting these $2,000 checks together for the sort of late summer next year. And the details are still being put together. As far as the cost, well, one, unknown because the terms are not defined. Two, they will need to get it through Congress. But, it's going to be on the order of multiple hundreds of billions of dollars to do this. So, basically all the money that's been taken in tariffs and more. So I think the bigger picture conclusion here around, just this idea that, we continue to run, full speed ahead in terms of, deficits and debt at the national level. That continues, no change there. And yeah, so it looks like these things are gonna have a much higher probability of actually happening than certainly what it looked like a couple weeks ago. So
But I like read newsletters, and I think the dollar is a disaster. Like, I think the dollar's going down forever. What you just said is so bearish for the dollar. I mean, I lost my ass yesterday in the dollar, but I still feel I have the feels. I want to still be short the dollar, Steiner. What do I do?
yeah, I think you got to hold simultaneous realities in your head, right?
You think? Like, do you think you have to think about Takaichi's meeting with the BOJ today with my boy Skeletor? Do you guys have a picture, a live shot of my man? We're short of the Skeletor in the end because we think Takaichi is going to try to beg these BOJ. You see these BOJ yields? I mean, of course I'm impersonating just a voicemail I got the other day, but you wouldn't believe the kind of things that we get in terms of feedback. So I was just parroting it a little bit, and if it was an institutional subscriber, I wouldn't use that voice because they don't talk that way. But that's just to name one thing this morning. I mean, there are so many things that the eye. That's what I said. Been writing about. I have these top cam coaching points that the team quite likes sending out all of a sudden, and I appreciate that. But it's like that's the thing about fractals. They can see so much more than the human eye, and certainly more than the feels on the deficit.
They can, yeah. And look, I mean, we're fond of saying that risk happens slowly, then transitions to all at once, pretty quickly, right? So that's sort of where we're at the moment. And but yeah, I think longer term, you zoom out, and longer term, we're still very much on this this sort of inexorable path, right? Basically headed squarely into the fourth turning. Driven by a number of factors, social fabric dynamics, debt deficit dynamics, other dynamics. But yeah, just I think it'll be interesting to think through the implications of the timing around those stimmy checks when they come out sometime mid to late next summer.
In the meantime, like, first of all, it doesn't matter in the meantime to the market. What matters is risk managing quad four. That's where you buy dollars and treasuries that both were up yesterday, providing ballast to the portfolio so that you don't have 10 to 20% drawdowns and crashes. But like, that's going to that component of the debate is going to be whether or not quad one lasts for longer. And as a reminder, like, again, this is what gets people in a pickle, right, Steiner? They want and need to be long quad one. At the same time, they need to risk manage the quad four, right? So this item in particular would obviously be additive to consumption growth, negative to the deficit, but additive to quad one or two in terms of monthly outlooks.
Exactly. Yep. Yeah. I mean, I'm just sort of I guess I tend to do this, but I'm sort of already pretty at peace with the idea that we're ratcheting up here in terms of this quad four in the immediate term. And I guess to the extent you'd call the next 3 to 4 to 5 to 6 weeks intermediate term, and just looking ahead a little bit to 2026, but try not to get too far out over my ski tips here. So
well, on the shopping list, like I gave you some, and what you want is large cap, liquidity, quality, lower beta. We talked about this yesterday. It seems like forever ago, doesn't it? Yesterday. That's the thing about long-term investors. They can barely remember yesterday these days. It's crazy. But would American Express be in the top three? Like, if I'm looking for quality, large cap, exposure to the top end of the K, I could go on and on and on, but quad one or quad two fully loaded.
Yeah, Amex is still, pretty well positioned. From a position monitor standpoint, we've got it as a best idea long on a short and intermediate term basis, driven largely by influence from your trend signal. On a longer term basis, tail duration, it's more of a kind of bullish bench level. That's basically kind of where we're at in terms of what that means is that, as we get out into sort of, kind of mid 2026, the base effects are going to get more difficult for Amex. That's the reason. that longer term outlook doesn't look nearly as good as it does for, say, Synchrony or JP Morgan or SoFi or FICO. So that's the difference there. But and in terms of just fundamental positioning, the way these things go is that initially Amex will hold up better. It's lower beta, it's higher quality, it's the upslant of the K. All these sort of fundamental attributes are good, certainly relative to peers like Synchrony or Capital One or Ally. However, if it kind of gets going enough, and by it I mean this sort of quad four sell-off correction, eventually they'll come for the blue chips as well. So because of course American Express is still a lender. Their credit quality tends to be better than most of their peers, but that's the way these things go. So it'll depends on the depth and the duration of the sell-off. But I'd say in the early stages, yeah, it's definitely still a safe harbor until the signal says otherwise.
All right, good. Sorry, just pulling out of my garage. AXP top 5 most actionable. Just put that. And again, that's how you deal with it, patiently and slowly, because during the chop bucket with a quad 4 month, that's the blend you're looking for. High quality, low beta. Again, don't think of them as stocks and first.
Think of them as tickers with factors. Okay, tickers with factors. You're gonna get this eventually, and many of you already understand it. And thank you for the kind compliments on our coaching, because we're trying really hard to do that with the especially impressive demeanor of the one and only Josh Steiner. Look at that guy. He's immovable. Not gonna waver on this process, right, Jay?
Yes, that is right.
Jay?
Oh, sorry, I was a little slow on the mute button there. No, Josh is a
Yeah, it's just another one of my just another rhetorical question.
Wait, did you wait, you can hear me? Maybe you can't hear me.
Yep.
Okay. Yeah, Josh is amazing. I will say, because you mentioned Larry Summers, I will share that when we first Jack Cromwell first joined our team, he was emailing around for an infrastructure spending call to find experts, and he emailed Larry Summers, which I thought it was wonderful that he didn't know who Larry Summers was, because it's wonderful that he's becoming less well known in the younger cohorts. And he replied to Jack's request with, "I am besieged by requests. So my rate is $50,000 for half an hour, $75,000 for an hour. If this is of interest, let me know." And I believe the response was like, "Well, what if we throw in a massage?" So I will let that lie.
What? Like he's like he's such an arrogant prick. I mean, he deserves, partly deserves what he's getting. The way he treats people is terrible. But that doesn't surprise me, right? Like, just think about the arrogance of people that have lived off the establishment and the connections. I mean, like, who the hell asks for $50,000 for what? $50,000 for 30 minutes? What the fuck? I mean,
well, just also like in a like. It was just the idea of being besieged by requests was just amazing.
Yeah, he's such an ass, and he knows exactly who I am and what Hedgeye is, so that's part of the answer, to be clear. But it's because I basically called him out in front of other people, and he just doesn't like that. I mean, this guy wants to be told that everything he wants to do in life is he can do, and no matter how much he blows up like Harvard's endowment, I mean, this guy, you couldn't blow yourself up more ways than this guy's blown himself up publicly at this point. And to have the audacity to say that he wants to keep teaching, like, really?
Those are his obligations. I will just let this guy deserves 0 seconds of airtime. I just think that's a funny email. We did do our HVAC deck yesterday. I think we came to a very fractally congruent conclusion with the signal, where this is still very much in the reset, destock, mode where you have you have basically a whole bunch of things that actually make this industry worse. You have this refrigerant change, from R410A to a variety of other ones that will be expensive and hard to train and make actual installs go down. You have the removal of subsidies in the IRA from the One Beautiful Bill. So this is probably something that is at least a couple months from being ready to be along, and possibly a couple quarters. So held up there. We did add Carrier back to our bench because we're going to start watching it a little more closely and track it. Basically focus more on the trackers there. So that was I think it's a good deck. I think it's a good conclusion sometimes to put out, like, look at something that looks cheap and interesting and be like, nope, not yet. Right? I think that's a good discipline, certainly for me. We have the Rockwell Analyst Day today. Jack is attending that for us, hopefully not with Larry Summers. And we have a bunch of other sort of investor and analyst days this week. It's a big week for sort of corporate long-term narrative flow. And next Wednesday, just everyone should be aware, we have John Deere that will ruin my Thanksgiving holiday as it regularly does. So busy week and next week for us. We'll also be scheduling our mid-quarter themes call, competing with Nagaf for that. So a lot going on here. But I think that's it for us today.
Yeah, the signal on industrials is, as I said with Steiner on financials or on currencies for that matter, it's manifest, right? A fractal pattern has many, many, many components that the human eye can't see. But when you look at my sell signal on XLI yesterday, or get out of it, first of all, I'd reduced it to my minimum. That's how the process goes. Something breaks a medium term trade and it starts to threaten a trend breakdown, I just sell it. If it's quad 4, there's no asking permission. Yeah, I just hit the button. It's really easy, actually. What you find in quad 4 is that industrials, don't do well, obviously. But some of them the earliest of cyclicals will start to stop going down first. Now, air conditioning companies would not be the earliest, but trucking stock might be.
Yes.
Like JB Hunt's one of the stronger signals. So when I'm looking at this book that I want to buy, again, you think Marriott, think American Express. I'd actually, I shouldn't say actually, I'd put JBHT in there, not because I have a special relationship with the company or anything. It's just that I'm trying to think that through on why that signal looks different. There's also the strength of the recent quarter, right? Whereas there's the ongoing concern of past quarters for air conditioning versus trucking. There's a lot to think about inside of these cyclicals, since your mode is so, you have a waterfront that's so bloody wide.
And I think especially with the IEPA Supreme Court ruling, that is going to have a huge effect on transports and transport volume. You've had a lot of capacity taken out. Like, they are classic early cycle, which is not usually a framework I love, but there's a truth to it. That's why it, sticks
That's why
around.
they're called early cycle.
Just because I disagree with it doesn't mean it's not true. In this specific instance, I will say that there is this dynamic, and one of our highest priorities. So we have, I guess, 3 sort of works in process at the moment. One of which is to do a transport stack, but probably more focused on UPS and the express carriers. But maybe we'll look at LTL. Maybe we'll look at. We're very unlikely to be long. So we would do something like intermodal, which is JB Hunt, although it has a good deal of truckload. But yeah, there's a lot to do in transports, and it's well worth prioritizing. And then we have a grid storage deck that is, I think, a high priority for us. And then we have our themes deck. So yeah, we're quite busy.
All right. So if I could only pick one, and because FedEx, correct me if I'm wrong, is considered a transport by its GIC classification, what would I buy if I could only pick one? UPS, FedEx, or JB Hunt?
Our go-to is always has long been FedEx, and FedEx, I think, is probably put in a bottom, probably rallying, and historically like one of the best sort of trading vehicles for like a large cap liquid name that actually moves around a lot and generates a lot of alpha at times like this. So I usually go with that one. Although I think there's a potential for, JB Hunt to be a faster horse. And then UPS, I think, has been, you know, look, they're a unionized competitor that just steadily loses share and is executed very awkwardly in the express air business, adding surges of capacity and kind of bungling it at times. So I would, so I'm referring specifically 2019 to everyone who's in it. So I generally don't love a Teamster dominated company on the long side. Not that we short UPS or on that thesis alone, but that's kind of how I prioritize it, because FedEx has just been a really good name for that kind of swing move.
Yep. Good. Let's put FedEx on top 5 most actionable. He's doing a call on it, and it's officially now on signal strength on the long side, alongside the other 2. So I'd be long all 3. I just wanted to hear what Jay thought about that. If you go to a chocolatier, you ever been to a great chocolatier in Tokyo or in New York City, and you ask the chocolatier, in this case, Jay Van Sciver, who's you can forget more on the way to the bathroom about industrials than most of you, certainly me. I mean, most of you too, I bet. What varietal of this chocolate should I eat today? And and he gave me a nice breakdown. Well, if you like mint chocolate, I might go with a little bit more, a little more something in there. You go JB Hunt. If you want to go with what I always eat, which is Belgian chocolate, that's what I'm gonna go with FedEx. So these are like it's one thing to be the best in the world as we are on signals to quads. It's entirely another thing to have the best analysts in the world to color that up like the ice cream bar. So thank you for being my chocolatier.
Could be your Forrest Gump.
I love it. As my kids know very well, Dad likes chocolate ice cream. All right. Please don't send me 25 emails on how that's going to kill me. I know you're concerned about my health. I've improved in other areas. Let's just say that. All right, we're up to 4 most actionable, just like that. Fernando, you on today?
I'm on. I was gonna say we probably don't want to have some Dubai chocolate right now because the signal's not favoring it, making a nudge to it.
No. I think that shit's kind of overrated as a chocolate aficionado. I know why people like it, but
I love the
like if you
special
tried
strawberry.
the during Halloween, like how you get all varietals of Kit Kat and Mars, all the different products, and those Dubai Kit Kats were in the bag, like my kid's bag. I'm like, oh, let's taste that. It's terrible, just a terrible thing. That's not the Dubai chocolate that real chocolatiers would be recommending.
No, definitely not. I think I'd rather get the Costco brand Dubai chocolate. It's probably a better version of the Kit Kat one, but the real one is really good. I've had the pleasure, and it's very, very good. But I'm a pistachio lover.
You mean in Dubai? Like
Yeah.
if you're local. Yeah. Exactly.
Well, I had it originally with Michael Bloom in Riyadh, but it's pretty close. I'm pretty sure.
I mean, there are parts of France that are like that, by the way, that I saw this summer that had very good, similar type products. So anyway,
Anyway,
my
my analogy was more that the oil signal is still weak, and I was going to talk about especially the small cap oil names, Cord, CHRD, Permian Resources PR, and Matador MTER. 2 out of those 3 had one of the pension funds in your native Canada announced that they're acquiring significant stakes in them, trying to time the bottom here on both of these, just
Really?
ahead of quad 4, which is not something we would necessarily recommend. We think between oil not having signal strength, between them being small caps, and in the case of Matador and Permian Resources, they have a little bit more leverage going. It's probably not the right time in December, especially as you always say, December is the time when people sell their losers. They haven't been good performers this year. So they might be on the chop bucket so people can realize their tax losses. Um, going into quad one in the new year, it's going to be a different thing, but we'll have to revisit that once we get more signal strength on oil, and once we see maybe Jay's comments on JB Hunt and FedEx are going to translate into higher demand for diesel, higher demand for gasoline. But we're just not seeing that today, both in the fundamental numbers for the gasoline, diesel inventories and demand, and then obviously with the signal for oil and for these stocks. So, and there's plenty of inventory here on the mid cap and side, on the gas side of the equation, the natural gas side of the equation. I spent a lot of time last week speaking about them. But on the oil side, even though you're starting to see some of the quote unquote value players starting to make moves, right ahead of quad four, you don't want to pick up pennies in front of the train right now.
Yeah. Can you hear me okay?
Yeah, we can hear you now.
Can you hear me?
Yes.
Hello? Yeah. Yeah. I mean, he just gave another example of what, like, why did Jay and I just giggle about early cyclicals? Because it's just an empirical fact. Think about it. Transports, right? One of their top input costs is called oil or energy equivalents. That in quad four gets smashed. So your unit costs, your input costs go down a lot. And then when you get any incremental demand off lower unit or lower costs, input costs, you get off those lows. So that's same thing. All right. I know RPK is like holding his tongue here because he's done more work on energy and why that component or unit of energy is so important in our economic lives. I mean, we actually do have a couple minutes here, RPK, if you want to, pump your side gig.
On biophysical economics.
Yeah.
The importance of energy. Yeah, there you go. Sure. I'm happy to riff on this. No, I mean, it's effectively, that energy drives activity, right? So, I mean, ultimately, the system is as big as the energy that allows it to be. At any given time, as energy costs go up, that's a drag on liquidity. It's a drag on economic activity. As it goes down, it improves, right? So, this is like you have the kinetic activity that drives all of the economy is the real economy, and you need energy to accomplish that.
Yeah, we call it the most important chart in energy is essentially GDP per capita versus energy consumption per capita, and they go hand in hand. If you look at South Korea, which is the last country to really industrialize from unindustrialized to developed country, that relationship just went roof. And China is now doing the same, or had been doing the same. It's obviously stalling out now. There are claims that we're doing more with less energy. Uh, we'll see how long that holds. More GDP with less energy. We'll see how much that holds as AI takes more and more of a share of the economy. I would say it's not so much that we're doing more with less energy, it's that there's been a lot of subsidies to energy globally, which are now going away as we talk about quad four and the fourth turning. Part of this will be, can governments afford to continue subsidizing uneconomic forms of energy?
Indeed. I'm getting in a tough spot here from a cell signal perspective, but thanks for that, guys. Thanks, RPK. Friedman, yeah?
Hey, Keith, you're stuck with me today. Friedman's currently marketing in Texas for the second straight day, so I'm just going to pass the puck along.
Actually, now I have time to ask RPK a follow-up question. Where can people find more information about that biophysical stuff?
Oh, it's good. Plenty of reading on the Biophysical Economics Institute website if people want to check out bpeinstitute.org. Thanks for pumping it, man.
See that? I told you. Yeah, you got people once they get to know the RPK, they're gonna know it's side gig. He has got side gigs, including that jujitsu. He's in a band. Like, you think multi-factor, multi-duration type cats. I mean, you got one looking at you right there. Where's your ham hat, by the way? What is that hat you're wearing today? Is that some
Uh,
rogue thing?
This is actually you mentioned jujitsu. This is a Black Armor. This is a jujitsu brand of gear.
Oh, really?
Yeah, picked that up at a tournament.
Oh, nice. I like that. I like that. That's cool. All right. The ham is Hedgeye Asset Management. For those of you that aren't aware of it, we're not allowed to talk about the tickers, but we are allowed to talk to RPK. Thank you for that. Appreciate it. Felix, you're on, man. We missed you.
I'll be extremely brief because I'm bombarded
Don't
with
be.
China
We get
earnings
you. Don't
and
be brief.
marketing
Be
at the same time.
long-winded.
Yeah, so we have a lot going on. I would just say that we got out of Xiaomi and we haven't touched PDD, and both names are not doing well this morning on earnings. We also pitched our Tencent short yesterday, mostly on AI, and that stock also, just like the rest of tech, is down in China. So our win streak continues, but that's all I have today.
You know what's coming to China in Q1, huh? Quad 4. That's and we just got our first immediate term trade break signal on the Shanghai Composite Index. So let's put Tencent in the top 5 most actionable. The ticker, let me try, Felix. I know you only have a couple more seconds. TCEHY.
Yes, TCEHY. I guess let me just spend like 20 seconds on the pitch here. So Tencent's it's a really good company, and it's been a huge outperformer for us for more than 2 years now, I think. And we got bullish on them because of an inflection point in video games, and we were so right. And then they became an AI dragon post DeepSeek, and look at their valuation. It just kept going higher and higher, just like other AI dragons in China. But we think the party is kind of stalling for Tencent going forward. And the reason why we say that is a few points. One is on AI. So management seems to be a little bit more cautious on investing there. They talk about chips not being available from Nvidia and AMD. But frankly, this is a general change in their tone. More prudent, more about protecting profits. But this is a very dangerous sort of strategy that they're doing, because if they right now, when your peers like the ByteDance and the Babas are just stepping on the accelerator on the AI front, and you're more prudent and more cautious, you're gonna lose out. So, and we're seeing in the data that we track for all of these AI names, also, in China. So we think Tencent may actually surprise them negatively in the next say 6 to 9 months. This is a super contrarian short. I'm super convinced right now. No one is talking about shorting Tencent in China. This is a very crowded long, just because people are looking for AI beneficiaries, and Tencent easily is one. But as we argued yesterday, their Yuanbao product, it is greatly integrated into their vast product ecosystem. But we're just a little bit more cautious on where they can go now, because they're stepping on the brakes on AI spend. So to us, that is a misstep or misalignment with what we're thinking Tencent can do in the next I don't know, 6 to 12 months or so. So that's one. The other angle on this is something that's not really talked about on Tencent much, because this is a video game company, really. But they again, like they have a vast ecosystem. And social media, which includes their Weixin, WeChat product ecosystem, has been really not impressive. And this is not just a 1 quarter issue. This has been ongoing for, I don't know, 2 to 3 years at least. So, and they call it the VAS segment. So we're concerned about how VAS can grow from here, excluding video games. Um, and now that they have the, the Apple sort of news on getting 15% incremental commissions on the mini programs, that's not going to do, it's not a good sign for VAS. So anyway, I think it was a good flash call yesterday, but I would just caution, like, this is a very contrarian trade right now, which means that if we start estimates getting cut on this name, particularly on the growth side, it can really unravel here. So I make my pitch on Tencent. That's it.
Really good. This is where Felix makes his hay. I mean, you get hedge funds. A lot of hedge funds have to run neutral. I run the opposite. I lean into factors. But if you want to be neutral on the China factor exposure, which a lot of hedge funds have to be, and you want to extract the AI winner versus loser, you'd be long BABA against Tencent, right? The signal would have you do that anyway, irrespective of what Felix just said. But you just heard what he just said. And every time he speaks, we should be happy and appreciative for what he says, because he's generating as much alpha as anybody on the team. So great research, man. You've been on a heater, buddy. So keep going.
Appreciate it.
Yep. Glencher,
Yeah, good morning.
Your 49er, went on a heater for me. George Kittle went on a heater for me this weekend. I was happy about that.
Yeah, he is back, and he I think he had one or two touchdowns. I think he had one, but he's
No. You had two.
he did have two. Yeah, no, he's awesome. If I were Travis Kelce, the tight end for the Chiefs, I'd be worried that Taylor's going to shift her interest to George Kittle because he's just, I think he's so much better now. I just don't see the Kelce thing.
He's also clearly much better looking. I mean, he's not that Taylor would be like that way, but George Kittle is a beautiful man.
Well,
See that hair?
yeah, I know. He's like he's kind of like what Tim Lincecum was in the baseball world in the Bay Area. So no, Kittle's great, but Niners aren't healthy, so we're just kind of stumbling through right now. So lost too many core players. So I just don't know that they've got the horses this year. But I did want to touch on some news that's been breaking. The cloud guys, tech's getting hit generally, but Amazon, Microsoft, Google, and there's a little bit of pressure here coming from the EU, which is announcing that they're going to investigate whether they're going to regulate under the Digital Markets Act and take enforcement action against Amazon and Microsoft. And again, the first step of this is whether they're sort of subject to the act for their cloud services. They're obviously the three big hyperscale cloud providers, Google, Microsoft, and Amazon. But I think there's a little bit of news that's not quite being reported correctly here. The EU is opening up an investigation on the cloud services of Amazon and Microsoft, but I don't think it's covering Google. So I know that Google might be sort of thrown into the mix here, but based on what the EU is saying, they're mostly focused on Amazon and Microsoft for being potentially gatekeepers that unfairly dominate or unfairly, offer and execute their cloud services. I actually think Google is one of the complainants over there. And the complaint, I think, has mostly been focused on Microsoft that the users of, the Windows operating system, that it coordinates and integrates well with the Microsoft Azure cloud service far better than the others. And so there's interoperability concerns. There have been some outages on these cloud platforms. I don't know if you remember a few weeks ago, Amazon, AWS went down. People couldn't do anything. Ticket services, Venmo, all sorts of stuff just went down. And I think the worry is that there's too much reliance on single cloud providers, and that they need to find a way to diversify that, multi-home it, do things to make sure that the systems have more redundancy to them. I think that's part of the driver behind this. But Google is not really part of the investigation. It's Amazon and Microsoft. And again, it'll take months before they determine, in the EU, whether they're going to go after these guys with potentially billions of dollars in fines and penalties and other regulatory requirements. So it's preliminary. It's just an investigation whether they are subject to the Digital Markets Act regulatory process and whether potentially there could be some enforcement actions against them. That is months away. But Google's not part of that right now. Google is actually, I think, one of the drivers for the investigation, complaining about how the Amazon and Microsoft implement their cloud services in Europe. So that's the news here. Now, JT is not on the call. He just took off on another morning call that he has to do. But I'll wrap it there unless you have any questions.
No, that's good. That's helpful. I didn't know any of that, as is usually the case when you speak. So thank you for the update. And again, for those of you that are in line with the moves that I've been making in the last 3-6 trading days, well done. It worked. The process should work over time more so than it doesn't. And if you didn't, you have two choices. You either get on the right side of it, or you hope that there's a bounce so that you can get on the right side of it. Like, what do you think I'd go with? Hope is not a risk management process, okay? Good behavior, good process, rules-based decision-making is either rules-based or it is not. So again, I appreciate that a lot of people use our process for, tangentially to what they do or their process, or, they use it to augment their process. But if you're really trying to proactively prepare for quad 4, you don't do nothing when you don't make the right decisions 3 to 6 days ago. So again, doing nothing's not an option unless you're hoping, and hope is never a risk management process. Thanks for joining the call.